Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the March FOMC that's upcoming, what is likely to happen and what could be happening for stocks, gold, US dollar, major asset classes after this March Fed meeting that's had a lot of anticipation for a multitude of reasons here in 2024, a lot of lead up into this March FOMC in particular, but maybe not for the reasons that you think. If you're heading into the March FOMC and you're looking for a rate change, very unlikely to happen as we kick it off with the probabilities of rate action in March, and it's as close to 0% chance of a change as you can get. 1% chance via the Fed funds futures market that the Fed cuts at the March meeting, which is to say, no real significant chance of a change, 99% chance that they hold rates in March. And these Fed funds futures that we get the probabilities from have a lot of traders, a lot of volume in there, and they're usually pretty efficient in pricing in what the Fed is likely to do. And if you've traded an FOMC in recent history, and by recent history, I mean really the last like 5 to 10 years, the big trade isn't necessarily what the Fed does on Fed Day, because they've been really transparent, really calculated in terms of letting the public know what they're likely to do on the March meeting or the May meeting or the June meeting, December meeting, whatever meeting, so that there's the distribution curve usually looks like this going into the meeting. But the real meat of the trade is usually what Fed Chair Powell and the other central bankers have dictated could happen at future meetings. The press conference, the dot plot, those are the huge parts of the FOMC trade, and there's a lot on the table, a lot of unknowns going out past this March meeting for May and June. Because one, broadly speaking, we're on the precipice of the first rate cutting environment since the pandemic. Two, a lot of people wondering how many cuts will happen here in 2024. The Fed's dot plot at the end of 2023 said maybe 2, 3, or 4 cuts going into this year. The market, the Fed funds futures market, had priced in anywhere from 4 to 6 or 7 cuts. Those projections have come in a little bit and aligned with the Fed's dot plot. The market has started to align with the Fed. And you look at the probabilities for May or June, and one, you see there are a multitude of potential options, especially for June, of where interest rates could be by the time that meeting comes. And two, the probabilities of a rate cut at either of those meetings are lower than they have been in the last week or the last month. In May, now there's only a 12.5% chance of rates being lower by that May 1st meeting. June, it's more than 50% chance, but at 65.5% a chance of lower rates by the June 12th meeting, that's significantly lower than where it was in recent weeks. They've lost some of those higher probability likelihoods of rate cuts, and now down to just 65.5%, which is more than 50, but it's down from where it's been in the 70% handle in recent weeks. And so this is where traders will really look for the trade, is if Fed Chair Powell comes out and he is more hawkish, so to speak, doesn't see as many rate cuts coming, thinks inflation is still a problem, then you might see Treasury yields take off, bonds fall, US dollar could take off on something like that, and stocks, it'll be a really interesting story. On the flip side of that, if he's more dovish and talks up, oh yeah, we're very likely to cut in May or June, then you would likely see Treasury yields fall, bonds rise, and US dollar probably fall as well. And stocks, again, will they take it as a good thing or a bad thing? We will see a lot on the table for this March meeting in terms of what's going to happen at future meetings. And let's dissect the stock piece a little bit. Going back to the last time there was a rate cutting environment, which was in the lead up to the pandemic, and then the pandemic itself, obviously the Fed cut interest rates down to 0% in March of 2020. The stock market can take this a couple of different ways, right? So far, with the idea that rate cuts are coming in 2024, the stock market has priced in the same time that the interest rate market is priced in these cuts. The stock market is priced in a lot of upside, right? S&P 500 all-time highs. And if there were to be a different outcome whereby there weren't interest rate cuts in 2024, all else equal, the stock market could slide on that, with the idea being that, hey, we priced in some bullishness for a lot of these growth stocks, but also a lot of the Apples, Microsofts, and Amazons, given that they were going to be able to function at a higher level, an expansionary level, with lower interest rates. And now we're going to have to price some of that out if interest rate cuts don't occur in 2024. And so S&P at risk. Now, the only thing that I'll say is that this stuff doesn't tend to happen in a vacuum, right? And that's, you look at the last cutting cycle, and there were actually rate cuts before the pandemic in 2019, and then obviously they cut down to zero at the peak of the pandemic. And you can see the stock market did ascend as rates were moving lower going into the pandemic, and then obviously everything got hit as news of the more widespread COVID pandemic hit in March of 2020. But then they cut down to zero, and the stock market bounces back and is at new all-time highs in no time. The context does matter, and so we'll see what happens here, whether we get the cuts or not, and we'll see what the context is for not getting interest rate cuts, because if the Fed chooses not to cut, it very well could be because the U.S. economy is doing so well that they have to keep rates unchanged, and that could be bullish for the stock market. But like I say, all else equal, the market has priced in these cuts already, and if they price them out, that could pose a risk for the S&P 500. Another market to take a look at here is the gold market, also vulnerable to this no change in rates, or, I mean, something that's obviously always on the table is if inflation and some of these numbers do pick up again, and they haven't been moving as low as they've been projected to in recent months here in 2024, gold could move off of its highs given its negative correlation to interest rates. And so another market here in gold that, of course, it's doing its own thing. There's a reason why it's at all-time highs itself. But a good portion of that has probably been pricing in lower rates. The 10-year yield has gone from 5% down closer to 4%. And if inflation resurfaces and the Fed says, you know, hey, we're not cutting rates, and 10-year yields climb back up to 5%, and maybe the Fed has to hike again, kind of a doomsday scenario for gold, gold would likely fall. Now, vice versa, if the Fed can cut, the inflation gets down under control, and the Fed cuts maybe more than 3 or 4 times this year, then gold could see more upside given this negative historical correlation. Last piece, and it's going to look the inverse of gold, is this US dollar piece with a positive correlation to US interest rates. And so anything hawkish out of Fed Chair Powell could lead to another dollar bull run, which we've seen in spurts in recent months, is dollar getting back to highs against Japanese yen or Australian dollar on particularly hawkish tones or strong data from the U.S. leading to potentially higher interest rates in the U.S. for longer. And on that flip side, again, if Fed Chair Powell comes out and does confirm, we are going to cut by that June meeting. And if those probabilities go closer to 100% from where they are right now in the mid 60s, this US dollar, given these correlations, would likely move lower. Either way, so much stuff on the board here, so many potential outcomes going into the March FOMC. Again, Fed very unlikely to change rates here in March, but it'll be a really significant meeting to see if this is the first time that the Fed confirms that they will indeed be cutting at a future meeting, or if they continue to postpone it, that could really shake things up as well. We will watch to see the reaction across stocks, bonds, gold, US dollars, everything here at the March FOMC.